Hi traders, welcome back to my channel. If you're in an options trading group that has bots that provides trade alerts, then this video is for you. It doesn't matter if you're in my group chat or someone else's group chat, you'll still find this video helpful. But if you are not in my group chat, make sure you click the link below to join, okay? So in this video, I'm going to show you how to take a bot alert and trade it in and turn it into a smart strategic decision, okay? We're going to cover how to do quick research, how to read the options chain, and how to decide if and when you're going to take the trade. And disclaimer, this video is for educational purposes only. This is not investing advice. Make sure you do your own research before getting into any trade. And I'm going to show you how to do that. All right. So just give me one moment to share my screen. So first, I'm going to take you to my group chat. Now, this is the Wall Street Mob Mastermind. And as you can see here, we have trade alerts. So when you first see the trade alert, basically the trade alert comes from the bot recognizing unusual options flow. So this is not a guarantee, but it is a starting point. So think about it as if you're going to a picnic and it's sunny outside, are you going to check the forecast to see if it's supposed to rain later or not? You still want to check that forecast, okay? That's what we're doing. So first you want to look at the ticker symbol. This one is Apple. Strike price, 215, expiration, June 13th. This is a call. We're buying it. AI confidence is 62%. So when we see something like this, you do not blindly hop into the trade. This is when we do our research, okay? So you want to look at a chart and you want to use something like well, this is trading view, but you do have other programs that you could use. So this is trading view. So you want to pull up the chart. When you pull up the chart, you want to look to see what the overall stock is doing. And I like to pull up either a year chart or year to date. And we're 6 months into the year, so that's a pretty good amount. Now, it looks like Apple is actually it's on a downtrend because it has been down for the past 8 weeks. So you want to see what the overall trend is. It trading up, down, or sideways? I would say this is kind of on a downtrend. And also you want to see if the stock is near a support line. So I'm going to draw my support line about right here. I'm going to grab another one. On a line. So I would say this is where I would kind of put my support and resistance lines. So as you can see, it's bouncing up off of a support line, which is also confirmation. It's bouncing up off of support. You have your MACD. If you can see, your MACD is closing in. The selling is slowing down, meaning people are starting to buy more. And look at your RSI. Your RSI is fairly low, it's under 50%. So this so far it still looks bullish to me. From the chart, it looks bullish and it looks like something that I would want to get into me personally. Okay, so next we're going to go over to our trading account and we're going to look at the options chain. Now, if you do not know how to read an options chain, I'm going to give you a quick tutorial. We're looking at Apple. You have calls and puts. We have eight strike prices. Now, this is your options chain. In the option chain, you have your strike prices. The strike prices are right down the middle. You have your calls on the left side, your puts on the right. Each row each row represents a different contract. So each row represents a different options contract. When you first get in here, you want to look at your bid by ask price, and that's the premium you're going to pay to enter this trade. This is the change. You also want to look at the volume. Volume is basically, how much current interest does it have? Open interest. You want to look at your open interest. You want to look at your implied volatility. And remember, in our training, implied volatility, if it's below like 30%, that's low. If it is above 50%, that is considered high, and it just means you're going to pay a higher premium. You also want to look at your delta. Your delta is your profitability. It's going to tell you how much money you're going to make for every $1 that the stock moves. So for these right here, it's about $88, whereas down here is like $56, okay? These are all the things you want to look at before deciding whether or not you're going to enter this trade. You also, looking at the bid by ask price, you also want to look at the spread, because typically stocks with like a higher spread, those are stocks that you don't want to day trade. If you're day trading, you want to make sure the spread is not that wide. So like this is 5 cents, it just moved to 10, but this is like 15 cents, 20 cents. You see that? So if you're trading and then this is 2 cents. So you want to keep that in mind as well. If the spread is too wide, you might overpay for that contract and it might be harder to get out. Because basically with this, let's just say instant. You buy this for $9.25, you instantly lose $15. That's basically what they're saying. Okay, so now the big question is, do I take this trade? You would take the trade if the price action matches the alert. Remember, our alert was at 215. So our resistance line is at around 213, right? But the stock is currently trading at 201. So we have like $12 that the stock can move. So I would say yes, the price action matches the alert. And we also have that volume. Do the setup look clean? I would say yes. Do you have a clear entry point and exit point? Right here. I would enter, like it just bounced up off support. So I would enter at this 201, but my exit, and we're gonna exit around 208, 209. Okay. So yes, we have a clear entry and exit point. And we also want to determine how much are we willing to risk. So when you come down here, let's look at this. This is 193, right? So you don't want to set your stop loss like this low, but 193, that's like a $7 difference that the stock could move, and another one's like, uh-oh, I'm sorry about that. Yeah, I don't even 193. I think I just said the wrong number. I think I'm saying like 793 or something. 193. Lord Jesus. Um, so yeah, you want to look at the threshold. If you notice how long these wicks are, every time it kind of get down here, people start buying. Get down here, people start buying. So that tells me they really don't want it to go that far. So I would set my stop loss at like that 195, right? 195, because you don't want to lose more than $5, all right? And you really don't want to lose that much, but that'll give you a threshold just in case it do come down a bit. You don't want to set it like too close. Whereas you got a um $5 stop loss margin, right? That's your risk. But actually it's up to you. I would put it at my five. Me personally, I would do the $5 because my risk tolerance is a little higher. But for you, you may put it for a newer trader, maybe 197, something like that. But you have the potential, the upside is about $12. So we're going to risk $3 down with the potential reward of $12. Okay. So that is like a 1/4 chance, or like risk to reward ratio. So that risk to reward ratio actually looks good. So if you said yes to those following questions, does the price action match the alert? Yes. Does the setup look clean? Yes. Do you have a clear entry point and exit point? Yes. What is your risk to reward ratio? We know it is 1 to 4. I'm willing to risk that 1 to 4, okay? I'm willing to take that risk. If it's 1 to 1, you have to ask yourself, are you willing to take that risk? So me personally, this is how I would say, yes, I'm going to take this trade, right? Now, on the flip side, so we were looking at the 215. 215 call. That's 57 cents, which means you'll pay $57 to get in this trade. Me personally, I wouldn't take that particular trade. Me personally, I would come up here and I would trade something different, only because I like high deltas. I prefer high deltas. So if you were to take this 215 trade, that's $11 for every $1 that the stock moved, but it's only $57 to get into that contract. Whereas up here, if you have this is what's called out of the money. If you've ever heard the term out of the money, that's what that means. That 215 call will be an out of the money call. You could do something around the 200 that's at the money because that's the current trading price, or you could do something that's in the money. Now with this, you'll be making $80, well, almost $80 for every $1 that the stock moved. $72 for every $1 that the stock moved versus 11. So those are things, this is why it's important to know what your delta is when you're deciding to get into a trade. But also, it depends on what your account looks like. Because not everyone has $1,000, and I understand that. Not everyone has $1,000 that they can put into a trade. Not everyone has $400 that they could put into a trade. But if you got, and see, it's already went up $3. Now it's $60. $60 a little cheaper. So you also want to know, what your account look like and how much you're able to trade. So reasons we would not get into this trade, right? So let's just say Apple just had a huge move and we're chasing a big move and we're chasing big news. You never want to chase. You do not want to chase no FOMO, okay? You don't want, FOMO is fear of missing out. We do not FOMO trade. We do not trade chasing big gains or like after a big move. You heard Apple went up $10 yesterday. Now we're getting in. We're not doing that. Okay. If you see that the premiums are inflated, let's just say it was a high spread, like $2 and $3 spreads, you would not want to get into that trade. If the chart is super choppy and unclear, you do not want to get into that trade. Our chart was clear. It was clearly bouncing up off support. And it's right in between that support and resistance line. Okay. And if you're unsure why the trade was alerted, you do not want to trade that trade. Okay. So before you get into anything, you want to ask yourself, what is my plan? Where will I cut my losses? And how much profit will I take? Now, I teach to take 10 to 20% with each trade only because, but if you have a runner, you have something that's running, let your runners run until that momentum slows down. But if you're just sitting on something and you're already up 10 to 20%, go ahead and take your profits. Don't chase really big moves. Don't chase really big profits because it's better to have 8 consistent, like 10 to 20% profit trades than like 1 out of 10 that's profitable. The other ones you're losing because you sat into it too long and stuff like that. You don't want to sit into your trades too long. Like I said, you want to have a clear plan when you're going to get out, when you're going to get in, okay? Before you enter that trade. So just remember, your bots are tools. They are not signals. We are going to use them as a starting point. It's not the finish line. When entering a trade, you want to make sure that trade fits your style, not mine, not anyone else's. You want to make sure it fits your risk tolerance, not mine, not anyone else's. You want to make sure it fits your plan, not mine, not anyone else's. Okay. Now, if this has helped you at all, make sure you hit the like button, drop a comment below if you want me to break down anything else, and make sure you join our Discord chat. And happy trading, trade smart and strategic. And I'll see you in the next video.